Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Well, how do you make money in commodities? You know, this show is all about commodities and hard assets, and my guest today is going to tell us. He's Andy Hecht. He's the author of the book, How to Make Money with Commodities. He's also a radio show host on TFNN. Andy, it's great to have you here.
Thanks so much, Michael. Pleasure to be here.
All right, so like I said, we're all about commodities and hard assets here. You have a long career in that area. How do you make money with commodities?
Well, you know, all of us have innate understanding of commodity markets. We buy bread, that's wheat. We fill up our tanks with gasoline, our automobiles with gasoline every once a week. So we understand prices, and these things trade. And we have investments, we have 401ks, we buy stocks, we trade currencies, we all kind of bonds, fixed income, and commodity prices actually affect all of these assets. So it's very important that people, even if they don't trade commodities, have an understanding of commodities. Because look, you take a stock like Walmart, they bring products to market, they use fuel. That affects the price of the stock. So we have to understand what the commodity markets are telling us.
And you're basically saying that most people have an understanding already because we go to the grocery store, we fill our cars up with gasoline. So we have an understanding of price levels. We know when things maybe get too high and when things are a bargain, and they should incorporate that into their investment,
Calculus.
Thinking process.
Right,
calculus.
Exactly. And when we look at commodities, the commodity markets are the futures markets, but they're also very big physical markets. And in the book, what I try to do is explain the physical markets, how they work, who are the biggest producers in the world, who are the consumers in the world, and how does that all filter into the derivatives market, which is the futures market, which for the braver of heart can do quite well in it if they have a good understanding of how these markets operate.
Now, speaking of understanding, that very few people probably would have your level. You worked with one of the premier commodity trading companies in the world back in the day, was Philip Brothers, Fibro. I know you were a precious metals specialist. Tell me a little bit about what it was like working there and your thoughts now on some of the markets.
Sure. I started when I was 17 years old, while I was going to high school and college, and I delivered telexes, and I worked my way up. Eventually ran a couple of departments at Philip Brothers, at Solomon Brothers, and then at Fibro Energy. Ran the precious metals department, the nickel trading, sugar trading. It's very interesting because you learn the physical, the derivatives, all of the markets. As far as what's going on today, where do you want to start? We could talk about. Well, I covered everything from meats to energies to precious metals.
Let's start with the precious metals.
Sure.
Because I know recently, and I listened to one of your broadcasts, your radio broadcasts, and you had a bearish call on gold, which turned out to be very correct. We saw the price come down back into the 1100 level. We popped back up again. What's your outlook now?
I was correct in the short term, but I wasn't as correct in my overall call. I thought we were going to go down through 1180, and we didn't. We held. And I think it just came, it was kind of a confluence of events with Diwali, with the festival season in India, increased physical demand that's brought the price back up. But precious metals, particularly gold, is frustrating every bull and every bear because it's stuck in a pretty tight range here. The interesting thing about precious metals, Michael, is that platinum broke down. Silver broke down. The platinum gold spread, the last I looked at it, is about $20-30. Historical norms for that, about a $200 premium. So that's low. That means platinum is cheap or gold's expensive. The silver-gold ratio, the long-term norm there is 55-1. That's trading around 71-1. So either silver is cheap or gold is expensive. This is where the markets are now.
As a former physical trader, was that a very important thing for you to look at as sort of a barometer for the market overall? You looked at those spreads?
Absolutely, and I don't only look at them in gold. I look at inter-commodity spreads in everything. If you look at grains, farmers decide which grain to plant based on the ratio of corn to soybeans. It's substitution spreads. And silver versus gold, both precious metals. When silver gets too cheap, we tend to see more physical demand in silver, but we're not seeing that now.
This is a great tip because I think most people think in terms of flat prices. They look at one particular commodity market and not relative prices like one compared to another. And there are relationships there and there's sort of boundaries. Like they don't really get too far out of whack most of the time.
But, well, they do, and when they do get far out of whack, those are the greatest trading opportunities. You know, we'll talk about the platinum gold spread for a minute. You had that over the last 40 years. The lowest that's traded is a $200 discount platinum to gold. That was right after 2008 and right after the global recession. The highest that traded at was in 2007, $1,100 premium platinum versus gold. The best profitable opportunities are on these extensions. And I'm seeing an extension now. So the bottom line for me is that either gold is too cheap, silver and platinum are too cheap, or gold is too expensive. And given the action in commodity markets in general, I tend to still think that gold's too expensive relative to these other precious metals.
Let's talk a little bit about oil markets. You know, we've seen oil, I think, surprise a lot of people in the degree that it has come down. Now, you have an interesting kind of thesis on what's going on here.
Well, you know, not to try to sound too crazy, but I think that the oil price is being managed. You know, we put together a coalition to fight ISIS in the Middle East, and we're doing that in Iraq and in Syria. And that coalition contains a lot of Arab states, and a lot of those Arab states are very big OPEC producers. Saudi Arabia, Kuwait, Qatar. You know, what I think is that the $80 price for oil is really the sweet spot for that coalition, and let me explain why. First of all, at an $80 price, the U.S. maintains oil independence because you have a lot of crude, high production cost crude coming out of the Permian Basin, coming out of the Bakkens, coming out of tar sands, and below 80 that becomes uneconomic. We also have lower oil prices now benefit the consumer,
Sure.
you know, tremendously in this country. Now, the interesting thing here is that one of the big things that we've been trying to do is to put pressure on Mr. Putin since he took over the Crimea, since he's, you know, on the border of Ukraine, and a lower oil price is a very effective tool in fighting Mr. Putin.
But is 80 low enough?
Well, 80
it's hurting their economy. We could
right.
see that now.
I mean, it would hurt them more at 60, but then it would start to hurt us at 60 because our oil industry would become uneconomic, and oil prices would become much more volatile and much more. If you notice, when we have these geopolitical events, oil hasn't been volatile like it was in past days. Below 70 or so, I think it becomes a lot more volatile when we have an eruption in the Middle East. So it's the sweet spot for me.
Interesting thesis. Let's see, national interests correlating to a certain commodity price.
Exactly.
I'll
well,
have to think about
Mark Rich, who I didn't get
Former
the pleasure. Former fibro
guy.
guy. He once said that oil is the blood that runs through the veins of the earth, and it really affects everything. So oil is a very effective tool. One of the things I thought that the president might do when all hell broke loose in the Middle East was to sell some SPR. I think actually if they are doing what I think they're doing, it's even more effective.
To just keep a lid on the price?
To manage it.
Right.
To manage it.
Right.
To make it less volatile. You know, maybe it was volatile for the last month and a half or so, but maybe it won't be so volatile going forward.
Now,
Time will tell.
When you trade nowadays, and I know you're still active as a trader, do you still prefer the futures markets, or do you do physical or ETFs?
I trade a lot of futures and options, and I love the ETF market. I think the ETF market has expanded and brought commodities trading to every portfolio and made it much easier. There are some good ETFs and there are some bad ETFs. Like the GLD is a great ETF. It tracks gold very well. The USO is a terrible ETF. It hasn't tracked oil well at all, but it's useful at times on a short-term basis. So I like to look at those, and I certainly kind of analyze those as well and try to pick the best vehicle. There's so many available to us now.
Now, I know you do a little bit in the foreign currency area, and you have two favorites because they're kind of closely correlated to commodities. What are those?
Exactly. The Canadian dollar, because the Canadian dollar is very much an oil-based and grain-based currency, and the Aussie dollar, because Australia is the supply zone for China. And these two currencies are affected, really dramatically affected on a daily basis by commodity prices. If you notice, when commodity prices started going down in early summer, those currencies kind of tanked. We went from trading the high 90s on the Aussie dollar, the Canadian dollar. We're down below 90 now on both. So they track very nicely, very nice correlation, and sometimes you can set up some nice correlation spreads, specific commodities against those currencies.
Andy Hecht, it's really a pleasure. A former Fibro guy. It's great to be able to pick your brain. Thanks very much for coming on the show.
My pleasure. Thanks so much, Michael.
That's it for now, folks. This is Mike Norman. By the way, you could catch more of Andy on his radio show, TFNN, and the book is How to Make Money with Commodities. This is Mike Norman. I'll see you next time. Bye-bye.